Hello everyone. Today we are going to discuss about scope of financial management. Before going into the discussion, please hit the bell icon to subscribe the channel. So let's go into the topic. Scope of financial management. What is all about scope of financial management? We'll see that now. It provides an analytical framework for financial decision making. To make decisions relating to financial matters, it provides an analytical framework. The finance function studies about the sources and application of a business firm. So this finance function studies sources and funds of application. That means from where the sources are coming and in what way we are applying for expenditure. That is all about we are going to study here. Next, efficient financial management leads to the wise allocation of funds for various uses. So, if you manage finance efficiently, that leads to allocation of funds for various uses. Efficient financial management is nothing but a financial manager should know the proper allocation of fund. That means proper usage of fund is the main part of financial management. It is a financial management, but it is an integral part of overall management. Next, scope covers to the following extent. If you see this, then we come to know what are the things we are going to study in financial management. First, let us see what are the questions to explain scope of financial management. First one, how large should an enterprise be and how fast should it grow? And second one, in what form should it hold the assets? Third one, what should be the composition of its liabilities? From these three questions, the financial manager should understand that how big, how should the enterprise and how it has to grow and how it has to develop day by day. And next, in what form should it hold the assets? It has to invest in various kinds of assets. And what kind of investments he has to make? That means the enterprise has to make so that it leads to profit maximization and wealth maximization. About them, we are going to study in later. Then, what should be the composition of liabilities? Financial management manager should also know about the liabilities, about the composition of liabilities, and what are the liabilities the business is supposed to have. Because later on we need to repay those liabilities. So here the businessman or the entrepreneur or the financial manager should have a proper knowledge regarding the sources of funds and application of funds, as well as about the assets as well as liabilities. These are the three questions should know to know the scope of financial management, and corresponding to that there are three decisions where the financial manager needs to take. First one, investment decision. The financial manager should know about investments. He has to have proper knowledge and he has to make proper analysis regarding the investments in various kinds of assets. And then financing decision. This is about financing decision. It consists of capital structure and capital theories that we are going to study in detail in next slides. Then dividend decisions. The profits of the firm has two alternatives. First one, it can retain in the business, and second one, it can give it to the shareholder in the form of dividends. So these are the major things where our scope of financial management covers. Now let's discuss about investment decision in detail. So here investment decision relates to the selection of assets in which the funds to be invested. So here the entrepreneur should select the asset in which he has to invest his funds. So that is on the basis of two broad categories. They are long-term assets and short-term assets. Long-term assets are the assets which yield the benefits over a period of time in future. Long-term assets are the assets which derives benefits throughout the entire lifetime of the assets and also derives benefits in a longer period of time. And now, short-term assets are the assets which derive benefits within 1 year. And not only that, it is also going to convert into cash. So these are the two things about long-term assets and short-term assets need to remember. Next, the financial decision making regarding short-term assets is referred to as working capital management. This is the most important thing that you need to remember. So the financial decision making relates to short-term assets or current assets. It is termed as working capital management. Then the all financial decision making regarding long-term assets is referred to as capital budgeting. Next, we'll see about working capital management. It is an integral part of overall management. It is concerned with current assets. Then short-term management is also essential thing for the long-term success of the business because it deals with all the operational activities, and without operational activities there is no business exist. So short-term asset management is required and prerequisite for any business concern. So it is an taking care of short-term asset management is the most important thing of a business concern. And there should be an efficient management in current assets like cash, inventory, and accounts receivable. And there are many more current assets, as I have mentioned only three here. And next, now capital budgeting. Now, as we have already studied that capital budgeting refers to investment decision in long-term assets, and it is also going to derive long-term benefits. That means we are going to receive benefits in the future. There are two important aspects which we need to study in capital budgeting. The first one relates to choice of the new asset out of alternatives. That means it is a selection of asset upon what asset you are going to invest. Next, the second aspect of capital budgeting decision is analysis of risk and uncertainty. Before investing, this step is required. Next, the second major decision in financial management is financing decision. This decision is concerned with asset mix. That means it studies about asset mix, that is composition of assets of the firm. What are the assets consisting in the firm? And it is important to know about capital structure of the firm. Now let's see what is capital structure. It refers to the proportion of debt and equity capital. That means you should have enough capital and in that proportion you should have debt. A proper capital structure with optimum proportion of debt and equity capital is called optimum capital structure. Then there are two things, there are interrelated aspects, capital structure theory and capital structure decision. And this we are going to study in detail in further classes. Dividend decisions. This is the third major decision in the area of financial management. It is concerned with the dividend policy of a business concern. There are two alternatives dealing with the profits of a firm. They can be distributed to the shareholders in the form of dividends. They can be retained in the business itself. So these are the three major decisions which we have studied in the scope of financial management. I think you have understood this class now. So I think you all will understand this class. So please do watch this channel and subscribe my channel. Thank you so much for watching my video.